Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly demand and support area. From here, all these previous rejections to the upside have been created. Every single time that the market tested this zone, it rejected it to the upside quite aggressively. And what we can see is that at the moment the market is testing this exact same zone. So there is a good probability of seeing some potential bullish price action being created away from this area. So the monthly time frame is quite bullish. Let's drop down on the weekly time frame and see what we have. Well, from a weekly standpoint, I did speak about EURUSD just a few days ago. I spoke about it when the market was here and I explained all the reasons for which we could expect this rejection to the upside, completing this weekly M pattern at the neckline, which is in fact exactly what the market is currently doing. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, at the moment, what kind of structure the market has been creating? Well, from a weekly standpoint, it is important to keep in mind that the neckline of the M pattern, by definition, is previous support turned resistance. So until this market will remain from a weekly closing perspective below this resistance, it can easily be rejected to the downside. Only a break above this resistance would make this market shift from a weekly bearish market to a weekly bullish market from a structure perspective, and at that point bring the creation of more potential weekly higher highs and higher lows, therefore the development of a weekly bullish trend. So it is very important to keep in mind that until we continue to see weekly closes below this zone, this market remains a bearish market from a weekly standpoint. Now, if we drop down on the daily time frame, what do we see? Well, from a daily perspective, we see a very similar situation. Also here on the daily, even though the market is rejecting to the upside, there is resistance at this zone, which is essentially very close to the weekly resistance. Until the market will remain below these highs, it will continue to be a bearish market from a daily standpoint. So let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing, so hedge funds and the biggest speculators. And then we will start to put together all this different information that we have identified both from the charts and also from this order flow. Now, what we can see is that, first of all, if we're looking at the data for the euro, we are already analyzing EURUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been increasing quite a bit, going from minus 9.9k all the way up to 67.8k, and then they started decreasing once again. So institutions at the moment have moved first to the bearish side for EURUSD, and in fact the market has been trending to the downside, and at the moment they have still not yet shifted back to the bullish side for EURUSD. We are yet to see an increase of the net positions. So it is important that until the net positions will not be increased again, we have no confirmation that the non-commercials have once again started positioning themselves back to the bullish side for EURUSD. So everything at the moment for the potential rejection to the upside away from that monthly support that we have identified at the beginning of the video still seems a bit too premature because we're still not seeing that institutional buying away from that support. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here on the daily time frame, as we were saying, until the market will remain below this resistance, it can easily be rejected to the downside. However, if we get the break above this resistance at that point, after the break on the retest of the previous resistance turn support, if we start to see institutional buying, so an increase of the net positions and institutions starting to move back to the bullish side for EURUSD, at that point we would have good probabilities of getting a rejection to the upside away from that monthly support that we have identified at the beginning of the video. So if the market creates this break and retest with institutional buying, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.